Are you ready? The last chapter of financial management, on which ICI never asked any question till now, but May 24 attempt is new attempt of new syllabus. They are for sure 101%. They are going to experiment a few things as far as your exams are concerned. So the list interested chapter or chapter. But as far as your attempt is concerned, don't ignore anything, because all the chapters are equivalently important. No doubt their weightages are different, time consumption is different. I'll give you ABC analysis and everything by the end of the lecture only. But don't ignore this chapter, because this is really practical chapter. Try and understand. This is exactly opposite thing which I have started. Receivable management, we were talking about recovery of money. Now we are talking about payment of money. Whenever you are purchasing your goods on credit basis, if you are purchasing material on credit basis, any other thing on credit basis, that fellow who is giving you credit is a creditor for you, right? No. And now you purchase that thing, that means you are not giving credit period, you are availing the credit period. You are customer now. If you are customer, so very important question comes in our mind: when to pay? Sir, it is very simple. No, at the time of purchasing you have to pay. No, if he is offering you credit period, you should avail the credit period. If you are availing the credit period, that means for that period you can invest your money elsewhere and you can generate ROI. If I am performing transaction as of now for rupees 100, that means I have option to pay 100 rupees immediately, but in that case that is to be considered as cash purchases. Payable management is not at all related with cash purchases. This chapter deals with credit purchases, and that's why that credit purchases is called as payable. Now something is payable. If it is paid, then why to consider that while calculating payable? Payable chapter deals with creditors, and creditors related only one question is very crucial, and that one is when to pay. Try and understand according to my example T0, that means time 0. As of now, I perform one transaction and that transaction is of 100 rupees. Now I asked my supplier what credit policy you are offering. He said, Yogesh, I am offering you 210 net 45. What is the meaning of 210 net 45? He is giving me two options. No guys, he is giving me two options. Option number 1 says, if you are paying on 10th day after transaction or before that period also, you will be getting discount of 2 rupees. That is 2%. And second option is there, when you are paying on 45th day, that is the last day of the credit period. In between also payment is possible, but if you are not getting any benefit by paying in between, why to pay? Maximum credit period you should avail, no? So two options are available with us. First option, to pay or to make payment on 10th and avail discount. And second option, to make payment on 45th day and to sacrifice the discount. So in first event, here is discount, and how much is the discount? 2% discount is included, but in last offer there is no discount included. Now tell me guys, if you want to pay amount to your creditors on 10th day, how much amount you are going to pay to him? 100 rupees. You should pay him 90 rupees. Sir, from where you are getting this amount? Sir, how much is the discount? What was the transaction amount? 100. If you are paying now, you are availing 2 rupees discount. That means outflow for you people is 98 rupees only. Correct? No. Now try and understand what is the meaning of this. If you are paying 98, that means you are investing 98 rupees to your supplier. You are keeping those 98 rupees with your supplier for 35 days to generate 2 rupees of inflow. Sir, 35? Yes, 35. You are making payment on which day? See, you have two options on 10th day. Either to make payment of 98 or to invest 98 in market. If you are making payment of 98 to your supplier, that means you are investing money not in market, you are investing money with supplier. And supplier is giving you return of 2 rupees. From where I got 2 rupees? Discount. Transaction is of 100, but I am paying only 98. Think from different perception. You are paying 98 means you are investing 98 and you are availing benefit of 2 rupees, correct? Now if you are availing benefit of 2 rupees by investing 98, if you multiply this by 100, on your calc you will be getting one figure of interest which you have earned, and that amount is 2.0408%, but this is the benefit of 35 days only. Tell me, 35 days, how I compute it? Instead of paying or instead of making payment on 10th day, if you pay on 45th day, you will be having 35 extra period available with you, right? No? So supplier is giving you benefit of 2 rupees, but this is benefit for entire year or benefit of paying 35 days early. So this 2.0408 is our benefit which we earned by paying 35 days early. If you want to calculate yearly cost, then for that purpose you should simply compare the computed figure with 360 days. Please perform cross multiplication here. Into 365 divided by 35, you are going to get approximately 28.28, that is 21.28% of a figure. Sir, what you computed, sir? This is benefit. Sir, benefit what? Given by supplier. Sir, why he is giving you this much benefit, sir? Because of early payment. This is option number 1. Option number 2, if you are not making early payment, that means you are not interested in availing the discount. In that case, you are paying this 98 or you are holding this 98. If you are holding this 98, instead of keeping that fund idle, if you invest elsewhere, you are going to get some additional benefit, and that additional benefit is opportunity cost. Suppose opportunity cost of the market is 25%. Suppose opportunity cost of the market is 25%, means by investing 98 rupees in the market, you are going to earn 25% return. Whereas by making payment to the supplier, you are earning and you are getting benefit of only 21.28. What is advisable to make payment on 10th day or 45th day? So when your opportunity cost is greater as compared to the benefit given by the supplier, in that case, you should go for higher benefit. On the opposite side, one more case I would like to discuss. Suppose in this case, opportunity cost is 15%. What is to be done? Pay early. Entire chapter deals with only 2 things, whether to pay early or to delay the payment. If you are paying early and if you are getting more benefit, you should pay early. But for the purpose of comparison, one more thing is needed, and that thing is called as opportunity cost. No. Which chapter I started? Working capital estimation. In payable management, we are discussing only one thing. We are taking care of only one thing: when to pay money to your supplier. You have 2 options. You can pay early or you can pay later period. If you are paying early, that means you are going to get a discount. Whatever discount you are getting, you should compare that discount with amount of payment, and you should calculate first percentage of that benefit. That percentage of benefit you should convert into annualized figure. How to calculate annualized figure? Your benefit is for 35 days. As per our example, you should convert that for 365 days. That actual benefit given by supplier, you should compare with opportunity cost. Wherever you are getting higher opportunity or higher return, you should go for that option. What is the conclusion of this point? If 15% opportunity cost is there, in that case you should go for early payment. If your opportunity cost is greater than this particular figure, in that case you should go for 45th day payment. Understood perfectly. Now see here, magic. Payable management, when to make payment is our decision. Here example is there. YP Limited, great company, has been offered credit terms from its major supplier of 2/10 net 45. Same example I solved. Hence, company has the choice of paying rupees 100 or to invest rupees 98 for an additional 35 days. Same discussion, no? What we discussed, transaction amount is 100. If you pay now, you are going to get discount of 2%. That means you have to pay 98. So you have option to pay 98 on 10th day, or you can delay your payment and you can pay this 98 on 45th day. If you are paying 98 rupees on 45th day, that means you are free to invest that fund for 35 days period. From where I got 35 period? Difference between 10th and 45 days, that difference was 35. Same thing is covered here at the rate of 25%. That is 25% is ROI. That means in this solution, ROI, opportunity cost, is to be considered as 25%. What was the rate computed by us? 21.28. Opportunity cost is to earn 25%. What decision we should take in this case? Immediate payment or delay? Means we should pay on 10th day or 45th day. Now question asks you same thing, and pay eventually rupees 100 to the supplier on 45th day. The decision as to whether the discount should be accepted depends on the opportunity cost of investing rupees 98 for 35 days. Analyze what should company do. So we have analyzed the scenario. We bifurcated our calculation in 2 parts. First part was related with your discount. What was the percentage of discount? 2% discount. And second part is related with no discount category. Are yes or no? If you are paying on 10 day, you are getting benefit of 2 rupees because you are paying only and only 98 rupees. That means 2 rupees you are earning by making payment of 98. That means this is going to give you 2.0408% of returns, but these are the returns computed on the basis of 35 days of pending period. If you convert this into annualized return, you should compare it with 365, and this will give you 21.28% return approximately. Yes or no? 21.28% return is nothing but benefit. Who is giving you this benefit? Supplier. So this is benefit from supplier, and this benefit you should compare always with the available opportunity cost. How much is the opportunity cost given in the illustration? It is 25%. Yes, no. Now here opportunity cost is greater to the benefit offered by the supplier. That's why company should make payment on 10th or 45th. That conclusion we need to write after this. Understood till this point? Please copy this. Based on same calculation, 2 sums are covered in our classwork.